Joining me now for a closer look at what's playing itself out in that market scene is Martin Smith from Anchor Capital. Martin, a happy Monday to you. Thank you so much for your time today.
Yeah, likewise. Thank you so much for having me.
Wonderful, Martin. It's a brand new week. Of course, we are expecting some fresh data to come out of the US. But here in South Africa, I think it's a bit of the same in terms of what might be driving market participants today. And that could be the political risk that remains around in the system.
Yeah, absolutely. I think some of that has been abated with uncertainty we had kind of in the build-up to the decisions post-elections in terms of coalitions and cabinet members and the like. And I actually think you're seeing a bit of positivity in South Africa for the first time in years, dare I say it, around the stocks that we have. I mean, things are looking cheap, some kind of tailwinds coming through, things like load shedding and the like. And I think you're also seeing some foreigners starting to get a little bit curious and wanting to kind of take up some positions in some of the SA stocks. And that liquidity can be hugely beneficial for our market. So I'm getting quite positive. I think a lot of people are, but obviously nothing goes up in a straight line. We did see a bit of positive movement last week, but I think you'll see quite a positive 6 to 12 months from this SM market from here. So I'm quite optimistic.
Optimism is great to see. Martin, I also want to get your thoughts on that US inflation printout later this week, what your thoughts might be on that, but also a few analysts coming out, I think, from various banks around the world, concerned that the United States' tech rally may be overheating.
Yeah, I think they've been worried about their tech rally now for a long time, and it continues to grind higher. So it's always a tricky one where you kind of have the disconnect between momentum and growth versus versus valuation. So it's always a bit of a tricky one. Like I said, I think that valuation and calling the tech sector a bit high has been the case for about 18 months or so. So interesting to see. With regards to the US inflation numbers, we had CPI come 2 weeks ago, better than expected. And I think CPI is the big one to focus on, which comes out, I think the 7th of July, so 2 weeks from now. Then we've got that PPI number coming out later this week. And I think just because of the makeup of the US economy, which is mostly consumer based, I think that's the number I focus on a little bit more. But I think nonetheless, your point is valid around we're going data point to data point at the moment. I think at the beginning of the year, we were looking for 7 cuts. Now we're probably down to about 2. So I think we're going to continue to look for any indication as to what that US CPI number is and what the Fed will do. So like I said, data point to data point, we'll take what we can get at this stage.
Then in company news, Naspers Prosus, keen to get your thoughts on this one. We are seeing Naspers there in the black at $24 million. It's not a lot, but I guess if you think of where this amount used to be or has been for a long time, it is something worth sharing for markets.
Yeah, absolutely. And I think 80% of the Naspers Prosus story is still Tencent and what happens there. And I think Tencent is operating very, very well, and you just need some sentiment to turn in that Chinese market. I think you could see that trickle through quite nice into SA. But I think on the 20% of the story is kind of the e-commerce, the non-Tencent stuff. And that, for the first time ever, has turned profitable, which is very, very good, obviously. And it's about 6 months ahead of schedule. So the other part of the business is starting to come through. Still think a little bit of a way to go, and one we need to keep watching. The other thing that kind of caught my eye was the share buyback from Naspers and Prosus. About 20%, a little bit more than 20% of the free float bought back, which is obviously very beneficial to shareholders. So I think quite a good story all around, and I would probably be adding to whatever shares I have in Naspers and Prosus on the back of the results.
Many people, I think, Martin, are still, wonder if it's worth it to get Tencent via Naspers Prosus or to go straight for Tencent.
I mean, that's been the big question, right? And I think that's what they've been trying to do and work so hard at, is to kind of push the rest of the side of the business and not just rely so much on the Tencent story. And again, it's starting to work. Profitability is starting to come through for the first time ever. And they've kind of changed their strategy and focusing really on the investments they have as opposed to looking outwards. And it's a positive trend. Let's see if it continues. I think we'll also get a lot more detail with their presentation a little bit later this afternoon. But again, it's a story that's operationally doing well, both in the non-Tencent stuff and the Tencent stuff. And I think now it's quite a good opportunity to be adding more.
Keen to also get your thoughts on PPC. They're out back in the black there, doing well. But I think what's important here is the CEO is a little short of saying that they're about to go into a restructure.
Yeah, no, yeah, definitely returning to profitability is great for them. Also, the first time they've done a dividend or paid a dividend, sorry, in I think 9 years. So positive for them. Like you mentioned, that restructuring word has been a big part of the BPC story and will probably be a big part of it. So I think a very good set of numbers off quite a low base. Where to from here in a tough environment, I'm not sure. I think they need volumes to kind of really return. Not one that I'm really looking to get involved in at this moment in time, but I think quite a good result, and they've done quite well. And let's see how it performs in the coming kind of months and years.
And then RCL Foods, consumer facing there. When I look at their brands, I think of them as a bit of a premium brand, manufacturer here. But I think the big story with RCL is Rainbow Martin. I'm keen to get your thoughts on that one.
Yeah, sure. So the RCL Foods number that came out was very positive. I think expectedly so, because it was quite a low base in the previous reporting period. Like you mentioned, the Rainbow Chickens unbundling, I think it's later next month. When that happens, I think that's going to be quite an interesting story and see how that creates value for shareholders. In terms of Rainbow Chickens itself, you saw in this trading update from RCL Foods that chicken prices are lower and the cost of feed for the chicken has gone higher. So that's obviously not a good equation. It's quite a cyclical business and one that I'm not terribly excited about. But again, a decent result for RCL Foods, and the share price has been very, very positive in recent months. So it's great for shareholders there.
Martin, keen to get into stock picks, but first let's take a look at counters that have found favor with your industry peers.
I'm picking Sasol, same as I did on Wednesday, for exactly these reasons. You should see a commodity upcycle, and the big swing, there's two big swing factors in Sasol. One was the uncertainty around South Africa, and hopefully with the GNU around, that uncertainty has subsided a little bit. But the other biggest one by far was world chemical prices. They have started to tick up, and once again, if we get a commodity upcycle, they should do well, and Sasol will be a huge beneficiary of that. I mean, this share price is very, very bombed out.
Well, it's going to be something based on the South African bump. It is Standard Bank. It came out with a 5-month trading update. I think it was yesterday. And the performance was okay. You know, they're still, benefiting from the interest rate endowment effect. There's slightly better credit stats coming out. Standard Bank has always had a very, very strong ROE, and I think, with a more favorable, those little incremental steps in South Africa, it's definitely going to benefit from it. And I also think, as US interest rates and overseas interest rates start to come down, you're going to see our banks, which are hugely cash generative, got a nice yield, actually start to have, create a lot more interest amongst foreign investors. So I think they could benefit from that. There's already been a post-election bump, but I think it can run further.
All right, Martin, Sasol and Standard Bank. Keen to get your thoughts there.
On Sasol and Standard Bank?
Yes.
So Sasol is an interesting one. You've obviously seen that share price move very nicely in line with the rest of the market. I think questions will always be around delivery and how cheap the stock is actually, if you look at it in an earnings versus free cash flow basis. I think maybe a short-term opportunity there. Standard Bank, I'm a bit more bullish on kind of longer term. I think, like I mentioned at the beginning of the show, I think SA Inc. and the South African story is starting to look a lot more positive and a lot more interesting for both local and foreign investors. And I think the best way to play that is things like your banks. Obviously, they've moved quite a lot in the last week or two, but I still think there is a bit more out of this trade. So I think look for your entry point, but yeah, very bullish on SA Inc. and the banks, and Standard Bank forms part of that.
With that said, which counter are you having this afternoon?
So like I mentioned, SA Inc. been running quite hard, so I'm looking at kind of things that need to play a bit of catch up in that space. Curro is one that I think is quite interesting at this moment in time, and we were buying it last week. So this moment, Curro, I think is a good bet today.
Wonderful, Martin. Thank you for your time this afternoon.
Thank you.
That was your Midday Markets Update with Anchor Capital's Martin Smith.